The content here is for informational purpose only and should not be taken as legal, business, or tax advice or be used to evaluate any investment of security and is not directed at any investor or potential investor in any AlphaSwap podcasts.
Hello and welcome everyone. I'm King Uy and this is the AlphaSwap podcast. Every week we'll be discussing a top investment idea from the platform and have an in-depth conversation with the user who posted the idea. You can learn more and join our community at alphaswap.io. This week we're talking to Daniel Fogg. Thanks for being with us today, Daniel. Can you start off by giving us a quick introduction of yourself?
So I started out in high school when I discovered value investing, and that was when I basically wandered blindly into the markets for the next 2 years, trying to try FX trading and value investing, all without any success. And so after those 2 years, I had a big stroke of luck when I met this really sharp guy who was running a small boutique global macro hedge fund. And I offered to work for him for free in exchange for him teaching me everything. And so that was how I went from deep value to global macro today.
Great. And what is the investment style and philosophy that came with that?
So right now, the framework that I'm using is a top-down thematic macro trading framework. And so I go by themes. And basically, it's a multi-step process where I go from a super narrative, which is where I view the world headed towards, macro themes, which is the knock-on effects of these super narratives. So an example of a macro theme could be the global green movement that we're having. An intermediate step would be macro indicators, where we use economic data to track the progression or the regression of either the super narratives or the macro themes. And so once we've set our eyes on where the macro themes are, then we can find the securities which are mainly affected by it. And then we can also find counter securities, which could act as a natural hedge, but still have a macro theme behind it. And finally, when we want to put up trades, then obviously that's the final part of the framework, which is risk management, valuations, trading, and so on.
Gotcha. So which stock are we going to talk about today? What's the trade? And is there anything interesting about the context of the investment?
So today we're going to talk about Lynas Corporation, which is a rare earth miner in Australia. And so I'll use the macro framework to basically bring you through how we arrived to the kind of trade idea. And so for the super narrative, where we're seeing the world going, then there's two things that we're paying attention to, which is the breakdown of the old world order, where the US dominated the global geopolitical stage, and also social uprising. So I'll touch on social uprising first. And so essentially COVID-19 as itself, this pandemic has exposed the extent of wealth inequality, with stocks reaching all-time highs and millions still unemployed. And the pandemic has only brought into the spotlight this wealth inequality, which was exacerbated by nearly a decade of QE. And so the governments recognize that they can no longer rely on monetary policy to stimulate the economy. And because these effects, they hardly trickle down to small businesses and Main Street, and they boost the large corporations and widens this inequality gap. And so fiscal has become the name of the game, right? The governments, they realize that they need to build their way out of this crisis. And so at the core of many developed economies' fiscal bills is climate change. And the Green Initiative will be the narrative that essentially undermines the need for unlimited fiscal spending to aid manufacturing and growth. So Europe has their Green New Deal, Biden has his climate change agenda, and Japan, they just announced a green theme stimulus bill, and even China has its 2060 carbon neutral goal. So if China, one of the most polluted countries in the world, goes carbon neutral, then you can expect many other developed countries and some developing countries to follow suit as well. So this narrative is a tailwind for the renewable sector. And for the renewable sector, which consists of many things like nuclear, natural gas, not natural gas, but clean energy. So the key factors that we're looking at in the renewable sector would be electric vehicles and the wind energy, right? And these technologies, they use the key component, the core component that they use is permanent magnets, where its core raw material is neodymium and praseodymium. So essentially rare earths. And this is where we get to the second super narrative, which is the breakdown of the old world order. So the rare earth market is currently monopolized by China, right? They produce about 70% of the global production. And just months ago, Trump just signed an executive order to make rare earths a national priority. And with this globalized system breaking down into two, maybe even three hegemonic zones, um, then that's where we see the deglobalization taking place. And the key hegemonic zones that we're paying attention to is a pro-US camp, which is the Blue Dot Network, which consists of the US, Japan, and Australia, and the pro-China camp, which is essentially the One Belt One Road and some of Russia and maybe Southeast Asia. So because of this economic decoupling that we're seeing here, that's when we will witness global supply chains make massive shifts. And where do rare earths come into this equation? Because of the globalization that we're seeing, and also the follow-up on the green movement, we're going to see the rare earth market face two possible negative supply shocks. The first is the scaling back of trade relations. And so the last time we had a super cycle in the rare earths market, that was in 2009, 2008, when China cut off its exports. And subsequently, the rare earth market just exploded. And now it still remains to be seen how much more trade relations will be scaled back, but we do know that the main rationale for all the scaling back of trade relations is China trying to status, trying to reduce their dependency on the US dollar. So the second supply shock would be ESG mandates. The process of mining rare earths is extremely intensive in terms of its environmental impact. So unlocking additional supplies without violating certain ESG mandates will become even more difficult as time progresses. So in the context of deglobalization, you have rare earth miners and supply chains outside of China who are going to become far more valuable over the next decade. And Lynas Corporation is one of the few companies that are actually producing meaningful amounts of rare earths outside of China.
Great. That's very, very interesting top down. Really appreciate that. Is there anything in particular that's interesting about the company itself? Anything you want to mention about Lynas?
So Lynas is the only producer of scale of separated rare earths out of China, and which is also the second largest in the world, actually. And they also have the world's largest rare earth processing plant in Malaysia. And yeah, so basically they are a key supplier outside of China. So when we see the US and Japan pivoting their supply chains out of China, then they're going to look for the next biggest player, which is going to be Lynas.
Understood. So you've given a very good expose as to what the super cycles you're seeing here. Why do you think the market is not seeing that, and what do you think the catalysts are for the investment to work out?
So currently at this point, what the market is probably pricing in a smaller probability of this narrative. And what we're trying to do is to bet on the full realization of this narrative. And if we look at the charts of Lynas Corporation, the shares have actually broken out of a channel. They've broken up above a historical resistance. So we can tell that the market is actually pricing in this paradigm shift. And what we're doing here is that we're going to position ourselves in Lynas before the entire narrative actually materializes, and that whole narrative gets priced into the shares. And as for the catalyst, first of all, really the green movement is sort of like a no-brainer for the developed economies. But so that alone could cause a slow grind up for rare earth suppliers worldwide because of the higher prices from much larger demand for rare earths. But if we're talking about big price jumps, catalysts, then that would definitely be a breakdown in relations between the US and China, similar to what happened in 2008, 2009, when China restricted their rare earth exports yet again.
Makes sense. Can you give us a few key metrics on the company: growth, return on capital, margins?
So for key metrics, we do look at macro and micro. So macro, obviously, we are paying attention to NdPr, neodymium praseodymium prices, mainly because this is the core component behind the entire theme that we're tracking. As for micro, then we are simply paying attention to the average selling price for Lynas, as well as their EBIT margins, mainly because we want to see that Lynas is able to achieve a scales of economy in order to produce efficiently, and also for their revenues to track the rare earth prices forward. And as for downside risks, then I'm not overly concerned for Lynas because they do have enough cash to cover for the next 5 years of debt payments. So in the event where the proverbial rug gets snatched from under their feet in the event of global lockdowns, which I still see a possibility, then Lynas is more or less safe. It's easy. It's a safe bet to buy on dips.
Gotcha. And is there a bit more you can say about valuation of the company?
So as far as valuations are concerned, I usually pay attention to two metrics, which is the return on invested capital and the Q ratio, which is how much the market is paying for its invested capital. Now, Lynas is a relatively fresh company as far as this rare earth operation is concerned. And it only started generating revenue post 2013 when their Mount Weld mine was finally brought online and started producing rare earth oxides for sale. So pre-2013, it was basically like a junior mining company whose stock was trading on a buyout prospect by a senior mining company. And so it's not very useful to compare its historical valuations to current valuations. And for this reason, I don't look at Lynas historical metrics since those conditions are not the same. And to compensate for that, I'm just looking at the largest rare earth producer, which is China Northern Rare Earth Group, which is listed on the Shanghai Stock Exchange, ticker symbol 600-111. And so the underlying thesis really is that the US and Japan, two of the biggest net importers of rare earths, are going to pivot their rare earth supply away from China to the next bigger supplier, which is Australia and therefore Lynas. And so the best case scenario is that Lynas could become the China Northern for the Blue Dot network. And so if we try to overlay the historical performance of China Northern during the 08 to 11 super cycle, then we could get a rough idea of what kind of valuations Lynas might achieve. And so at the peak of that super cycle, the market was paying about 15 times China Northern's invested capital, while China Northern was achieving 64% return on invested capital. And so due to the macro themes that we discussed earlier, then I think there's a strong case that the rare earth oxide market will enter this new super cycle where its peak price would either match the previous high or even surpass it. And so in this case, my target valuation will be about 15 times Lynas invested capital, assuming that they can achieve that economy of scale, assuming that their return on invested capital is satisfactory, which can match that of China Northern. And so this Q ratio of 15 is our baseline. And in fact, because I'm even more bullish on the rare earth market right now, that target could go even higher. And so as far as share price is concerned, because our target is a Q ratio of 15, then we just need to multiply their invested capital by 15 to get a rough gauge of what kind of market cap that we're trying to target.
And what does that amount to? What is the upside on the share price from here?
So currently, as far as our invested capital is concerned, it's as where it's standing right now, that target is about $14.80 Australian dollars. But as far as we know, the management already has a more capex that's coming in. That they have planned for more capex, and that will obviously increase their invested capital. So it's a moving target over time. So our immediate target is about 14.8 Australian dollars, and the more they invest in the company, and if we see the return on invested capital growing in relation to the rare earth bull market, then that target will keep get adjusted higher and higher.
Gotcha. But in percentage term, what's the potential upside in that case?
That's about a 270% upside from here.
So finally, we'd love to get a couple of general investment insights from you. There's three. One is, which resources do you use for your research? What's your favorite investment book? And finally, what's the most important investment lesson you'd like to share with your audience?
So as for resources, I don't use any proprietary resources. A lot of my ideas are not original. Yeah, basically borrowed ideas. And I take a lot of inspiration from financial Twitter, where some of the sharpest guys are at. And once I get an idea, then I drill down on the topic. I just study the narrative that's happening through Bloomberg News. Just dive into the simple SEC filings of these companies and to understand their fundamentals as well. As for books, my favorite would be Market Wizards by Jack D. Schwaber. And the main reason is because it just shows that there are many, many ways that you can make it in this business. So you shouldn't be so hard up on yourself for, not being able to execute a certain strategy. There's really a specific strategy for everyone's personality. And so, everyone can do it as long as you put it enough time and effort. And as for the biggest lesson that I've taken away is really just how important a framework is. having a framework and mental models for every single segment of your investment process. And if you don't have a framework, then you can't distinguish signal from noise, and you're just flying blind into the wind. So really having a framework just gives you the mental stability to stomach drops and to buy on dips, or to know when you just have to take your losses.
Makes a lot of sense. Daniel, thanks very much for this very interesting thesis. Really appreciate it. Good luck and speak soon. Of course, anyone who would like to read the full thesis can do so on alphaswap.io, where you will also find a lot of other ideas. Thank you for listening, and we look forward to the next episode of the AlphaSwap podcast.